What are the IRS Form 990 Schedule C rules for nonprofit lobbying? Imagine trying to keep your nonprofit organization on the right side of the law while making your voice heard on important issues. That's where IRS Form 990 Schedule C comes into play. It's a key tool for transparency and compliance. If your nonprofit engages in lobbying or political activities during the year, you need to fill out this form carefully. It's used to report lobbying expenses and activities to the IRS. First, any nonprofit that spends money on lobbying must file Schedule C with their annual Form 990 or Form 990-S. This includes organizations influencing legislation directly or trying to sway public opinion to impact laws. If your nonprofit owns part of a joint venture involved in lobbying, you also need to report your share on Schedule C. Schedule C divides lobbying into two main types. The first is grassroots lobbying, which involves efforts to influence public opinion to affect legislation. The second is direct lobbying, which means directly contacting lawmakers or government officials. You will need to report how much money you spent on each type and the total combined lobbying expenses. For nonprofits under Section 501(c)(3), there are two ways to measure lobbying. One is the substantial part test, which looks at whether lobbying is a significant part of your activities. The other is the 501(h) expenditure test, which is more straightforward. If your organization chooses the 501(h) test, you must file IRS Form 5768 to elect it. Once elected, you report your lobbying expenditures on Schedule C, Part Roman 2A. The form helps you track whether your lobbying costs stay within limits. There are strict expenditure limits under the 501(h) election. You report total lobbying costs, including grassroots and direct lobbying. You also need to report other expenses related to your exempt purpose to calculate your total exempt purpose expenditures. If your lobbying costs go over the limits, a 25% excise tax applies on the excess. If you exceed the limits for years in a row by more than 150%, your tax-exempt status could be at risk. Organizations also need to report dues or assessments from members that are allocated to lobbying or political activities. Members must be notified that part of their dues is non-deductible because of lobbying. These amounts are reported on Schedule C, and any excess dues can be carried over to future years. Political campaign activities are a separate matter. If your nonprofit gets involved in supporting or opposing candidates, you must report this on Schedule C as well. But for Section 501(c)(3), organizations participating in political campaigns is generally not allowed. To stay compliant, nonprofits should keep detailed records of all lobbying expenses. Proper tracking helps ensure accurate reporting. It's also wise to notify members about non-deductible dues on time. Consulting with a tax professional experienced in nonprofit law can help you navigate these rules smoothly. In short, Schedule C is all about transparency. It helps the IRS see how much your nonprofit spends on lobbying and whether it stays within legal limits. Following these rules protects your organization's tax-exempt status and keeps your advocacy efforts on the right track.